The trend is your friend, especially right now, of course, when the trend is higher, as you point out, Keith. But let's talk a little bit more about China. Obviously, we've seen a lot of measures come out of China, stimulus coming through. It feels like every single day. But it's interesting, at least from where I'm sitting, you haven't seen a huge reaction to the upside in U.S. equities, as you might expect when you think about all the positive vibes. How are you reading, of course, what we're seeing out of China, those measures, and how it factors into the U.S. market right now?
Yeah, so I'll just say for context, I mean, the U.S. market is up over 20%. This is the strongest, year-to-date gains for an election year cycle since at least 1950. So I think context is important. And I think what we've seen is, obviously China was underloved. And, this was a shock as far as what they came out with when positioning was very light. So in some ways, I think you've maybe just seen some rotation, out of the U.S. markets into other areas that could benefit from a short-term basis. Longer term, we still like the U.S. markets. We think profitability trends are stronger. We think the economy is stronger. But on a short-term basis, I think maybe the reason why you're not seeing a bigger pop is we're up a lot in the U.S. and now there's been some rotation, to the global markets.
Very simply, even with that rotation, you have seen the S&P 500 hit multiple records this week alone, Keith. And if you recalibrate heading into next week, heading into that labor data, heading into the election season over the course of the next couple of weeks, do you believe that these records can persist?
I guess the way I would say is, the data suggests that we should be higher by the end of the year than we are today. What happens next week or into the election? I mean, normally in October, I heard Matt talking about the VIX earlier. Normally in an election year, you tend to see a spike in volatility in October. Obviously, a lot of things have been different. We've had different surprises. You tend to have an October surprise as well. So listen, I don't think it's going to just be a straight up move. But when you look at historically, first of all, the fourth quarter since 1950 has been up on average more than 4% and positive over 80% of the time. When you're in an election year and you're up over 10% going into the fourth quarter, you've been up every time in the fourth quarter. So I think the trend is still positive. I think the Fed is cutting rates, that we ultimately move higher. But again, I also want to be, frank, that I do think we'll have some gut checks along the way because everyone's feeling very good right now. There may be something from left field. And we also know this election is still very tight. So
are there places where you take profits, though, at these levels, Keith? I mean, even though we're not at 6,000 yet, 5,800 on the S&P or 5,700 on the S&P is a pretty elevated level. Do you take profits from your winners and rotate into maybe some stocks that haven't done as well?
Well, I think we do. Part of that is happening already when you're seeing kind of the broadening of the rally. I will say, though, I mean, I think a lot of folks have become more negative on tech recently. We actually upgraded our view of tech on the August sell-off. And those markets are still down off the recent highs. So we're seeing better activity this week from semiconductors. We had the Micron news. So I would say as we get into that fourth quarter rally, for folks that have become more skeptical on tech, we still think there's upside there, and that will likely regain leadership as we head deeper into the fourth quarter.